What happens if a US corporation operates in Canada without registering? A lot of US businesses start selling into Canada informally and assume they can clean it up later. That works for a while. The risk is that at some point your activity crosses the line from occasional export to carrying on business in Canada. If you reach that point without properly registering, there are consequences on the corporate, tax, and practical sides. The good news is that most of these problems are fixable. The bad news is that fixing them usually costs more than doing things properly from the start. Knowing what can go wrong helps you decide how far you are willing to push the "we'll sort it out later" approach. Corporate law consequences. Most provinces require foreign corporations that are carrying on business in the province to register extra-provincially. If your US company opens an office, hires employees, leases property, or otherwise builds a real presence without registering, the province can treat you as non-compliant. Consequences can include administrative penalties, late fees, and in some cases, restrictions on your ability to bring lawsuits in that province's courts until registration is corrected. Imagine having a major contract dispute with a local customer and discovering that you cannot easily sue because you never registered your company. Courts often allow late registration and reinstatement, but only after you clean up the history. Tax filing and assessment risk. On the tax side, operating without registration does not mean operating outside the tax system. If you are carrying on business in Canada and earning income there, Canada can tax those profits regardless of whether you have registered. The same is true for GST or HST if you should have been collecting sales tax on your supplies. If the Canada Revenue Agency concludes that you have had a Canadian permanent establishment or a GST, HST obligation for several years, it can assess corporate income tax, sales tax, interest, and penalties retroactively. You may also have obligations in Quebec or other provinces if your unregistered activity took place there. Backfilling several years of tax returns is possible, but it is more time-consuming and expensive than timely compliance. Payroll and employment issues. If you hire Canadian employees without registering properly, you can run into payroll problems. Employers are expected to withhold and remit income tax and social contributions on wages paid for work performed in Canada. Operating informally can leave you with unremitted withholding, which is taken seriously by regulators and can lead to penalties and, in some cases, director-level exposure. In addition, unregistered employers may not be correctly enrolled in workers' compensation systems or may not be complying with provincial employment standards reporting. Fixing these gaps later often involves audits, back payments, and negotiations with multiple agencies. Contract and relationship friction. Operating without registration can also create soft but painful friction with partners and customers. Sophisticated counterparties, especially banks, landlords, and large corporate or government customers, will search the corporate registry. If your company is not there, they may refuse to sign contracts or may insist on more guarantees and security. Even if nothing goes wrong legally, the simple fact that you are perceived as off the books can limit your opportunities. At some point, a major customer or partner may tell you bluntly that they will not move forward until you regularize your Canadian presence. Reputational and audit signals. Once you eventually do register, late compliance can be a red flag. If a new registration comes with a history of unfiled returns or unreported Canadian activity, tax and regulatory agencies may pay closer attention. From their perspective, you have already shown a willingness to operate in the shadows, even if unintentionally. That does not mean you will be punished forever, but it does mean that your first few years of formal operations may be subject to more questions than if you had registered when you first crossed the carrying on business threshold. Catching up and cleaning up. If you realize you have been operating without registration, the usual path is to regularize things proactively. That can involve extra-provincial corporate registration, opening tax accounts, filing historical returns where necessary, and paying whatever interest and penalties arise. Coming forward voluntarily and fixing the issue promptly generally leads to a better outcome than waiting for an audit or enforcement action. The process can be uncomfortable, but it also turns a gray, risky situation into a clean baseline you can build on. Once your corporation and tax accounts are in good standing, customers, banks, and regulators can treat you like any other legitimate operator. Final thoughts. Operating in Canada without registering is not a secret backdoor that lets you avoid Canadian law. It is a temporary blind spot that eventually closes. The more substantial your Canadian presence becomes, the more expensive that closure will be. If Canada is moving from a few test shipments to a real market for your US corporation, it is worth asking now whether you are already carrying on business under local rules, and if so, how to put proper registrations in place. Our website includes checklists that help you measure your current footprint against typical registration triggers so you can act before problems escalate. If you require assistance with Canadian tax matters, our team is ready to provide reliable professional support. Please contact us at 416-283-8774 or visit theaccountingandtax.com for more information. And if you found this video helpful, don't forget to like, subscribe, and share.